Hey, what's up, Power Trader? In this video, I'm going to walk you through how to pick your first stock. And I'm even going to share with you what first stock I would pick if I were getting started today, right now. Let's get into it. Hey, welcome back to the channel. I'm stock market coach and option trader Jason Brown. And I want to talk about how to pick your first stock. If you watch some of my previous videos, I'll walk you through how to determine how much money you need to get started, what tools you need to get started in the stock market, how to buy your first stock. And in this video, I'm breaking down how to pick your first stock. There's a couple things that I want you to think about because I call it about 3 to 4 general ways that you can use to pick a stock. The first way is the look around way, I like to call it. And with the look around way, I like to just look around and ask myself a couple questions. Number one, what do I use? What products or services do I use? Who do I do business with? Who has great customer service? Who gives me a great experience? Whose product have I bought that I'm always raving about to my friends and family? Because it's a good chance that the companies that you do business with or the products that you buy that you love and that you know, like, and trust are typically companies that are doing good in the marketplace from a stock and an investment standpoint. Now, that's not always the case, but generally, if you like a product, you're always raving about it, and so do a bunch of other people. It's a good chance that their stock is doing well because they're doing great things. And if you're buying their products and other people are buying it, and you're going to continue to buy it, well, that's going to indirectly push the product, or should I say push the price of the stock up, assuming the company's handling their business, managing all their finances. Which leads me to the second way that you can pick a stock. The second way that you can pick a stock, which I talk about in my free 1-hour webinar, which you can look at right here, is I break down looking at the fundamentals. But what is the fundamentals when you think about a company? What are important? Because there's a lot of different components to the fundamentals. Well, I like to tell people to look at 3 different things. I like to look at their sales, their revenue, and then their earnings, right? So how much is the company selling? How much revenue are they bringing in? And then how much of that, after they pay all their bills, their employees, all the other things, are they keeping? Now, I dive even deeper into this in that free webinar, so feel free to check that out. But you can determine from a fundamental standpoint if the company is healthy and if it's a company that you should be putting your money into. The third way that I like to determine on where to invest or buy my stocks is to look at the technicals. Now, if you're not familiar with the technicals, it simply means looking at indicators as if you were the weatherman to determine what the weather is going to be like. Well, you can do the same thing with the stock market. So for example, the weatherman's going to look at a map, they're going to look at clouds, they're going to look at precipitation levels, and they're going to take all that data using their radar and all that information and say, I believe that it's a 70% chance it's going to rain tomorrow or next week, or it's going to snow, or the sun is going to shine, right? Notice they didn't say 100% chance. And sometimes they do say 100% chance it's going to snow or rain. But even when they say 100% chance, sometimes it doesn't do that. Same thing with the stock market. So there's no technical indicator that'll tell you 100% without a doubt what the stock or the market is going to do. But there are indicators, just like the weatherman, that you can look at, like a stock chart, and you can look at different technical indicators like stochastics, MACD, Bollinger Bands. But now we're getting too fancy. Just look at the chart and determine if it's in an uptrend or if the stock has pulled back to a level that you feel comfortable buying, because you know if it returns back to the highest level that you'll make a good profit. And so I like to look at charts and use technical indicators, which we teach inside our course inside of Power Trades University, to determine if it's going to rain like the weatherman. But the only difference is we're talking about it raining money. I don't know, maybe you bring in some money raining, I don't know. Now that you've looked at some charts and determined if you're gonna make it rain some money, one of the other things I like to think about is, how does this investment fit into your big picture goals? If you are a socially responsible or social conscious investor, perhaps you're looking around and everyone's smoking medical marijuana and everyone is talking about that as the next growth engine, and you looked at the chart and you believe it's going to be in an uptrend, but you looked around and that doesn't fit your investment goals. It doesn't allow you to be socially feeling good socially about that investment. So even though it fits all the other criteria, it may not fit your overall goal. Perhaps you want to invest with a company that is bringing clean drinking water all over the world. And so you love what they're about. You're always raving about it to your friends. You looked at the fundamentals and it looks good. The company looks healthy. And you also looked at the technicals and looked at the chart and you like it. And it also fits your social responsible investing game plan. And so you go that route. The big picture is you want to think about why you're investing, because that can also help you determine which stock you should pick. If you're investing because you're age 65 and you're trying to just conserve your money for retirement, but still get a little bit better interest rate than what you'd get by leaving it in a bank, you may deal with less riskier stocks. You may not deal with tech stocks. You also may look at ETFs, or you might look at mutual funds, different things like that for you to invest in. If you're younger, you're 21, you're just getting started, and all you have is, a couple $100, you may be trying to grow your account as aggressively and as quickly as possible. And you may deal with more speculative stocks, more high growth stocks like tech stocks. And you may even start to venture off into options trading, where you're not actually buying a stock, but you're controlling it by using options. So that may determine drastically how different your investment may be depending on which bucket or which scenario that you fall in. So as promised, I told you I would share with you what stock that I would invest in if I only had a couple $100 and I was getting started today. Well, when I look around at what I'm always using, it's Apple products. I'm using the iPhone. I'm using the iPad. I have a Mac computer. I have all the things Apple. So from a perspective of what do I use, what do I like, what do I trust as a company, I'm looking at Apple. The second thing, when I look at the fundamentals, I like the sales. I like the revenue. I like the earnings per share of the company. So it fits my criteria there. Third, when I think about I don't even know what third was. When I look at the technicals on the chart, I like that Apple has recently pulled back from its all-time highs. I don't like to buy a stock when it's at the all-time highs, because that might be the moment where it turns around. But if it sells off from the all-time highs, so for example, if Apple's trading at 150 and it sold off down to 130, I like to buy it around 130, because now I know it has at least $20 or a 20-point move that it can go and that I could potentially profit off of. I have recent history of knowing where that stock has been, and now I also know where it can go or get back to, and how much money I have a perceived idea of how much I can make. So it fits my criteria from that standpoint. From a technical standpoint, looking at the chart, I like where it's at right now. And then thinking about being socially responsible, Apple has recently decided to try to work on lowering their carbon footprint by not putting chargers in the box. Well, I don't know. It could be to save some money too. I don't know. But even if it's to save some money, they're going to lower their carbon footprint, as well as going to make the books look better, because they're not spending money producing chargers, because they figured everyone has a charging block from all their other previous phones that they purchased, or if they want one, they can buy it separately, or many outlets are coming with USBs that you can plug straight into the wall. So they figure, why are we manufacturing this and putting this inside the box? So either way, they're being socially responsible by trying to reduce their carbon footprint, as well as if they're saving money by doing that, it's going to make the fundamentals look better, which makes me love the company even more. So that is one stock that I would purchase, some Apple stock right here, right now, based on the criteria that I just shared with you on how to pick a stock. So I hope you enjoyed this video. I hope you got a ton of information out of it. If you did, I'd love to hear from you in the comments. In fact, I'd love to know, which one stock are you looking at buying right now? Also, I want to take one of the comments and read them from one of our past videos. Lawrence Davis said, "Great video, coach. The 4 Agreements is also a great self-improvement book." We did a video about 4 books that I have on my bookshelf, and some of the books that have changed my life, or that I think everyone should read. And that's what video Lawrence is talking about. So Lawrence, thanks for sharing what book you think is a good book. Maybe I'll check out the 4 Agreements as well. Well, thanks for watching this video. Be sure to hit the like button if you enjoyed it. Also subscribe so that you can get notified when new videos come out. And I'm signing off saying, you never go broke, taking a profit. I'll see you on the next video.